This is our Forex blog for June 1st, 2011. I'm going to do a quick one today. The Swiss was one of the weakest ones, so the Swiss was one of the strongest ones, so you could have bought the Swiss against the dollar, sold the pound Swiss, uh, sold the dollar Swiss, sold the CAD Swiss, and let's just take a look at that. When you have currencies that are this strong on all time frames, dollar Swiss just absolutely decimated all day. 100, over 200 pip drop. Pound Swiss just got killed. CAD Swiss absolutely decimated. When our software shows you that one currency starting back at 3 o'clock is just incredibly strong, and the daily, weekly, monthly trend are all up, and it's way over the 80 line almost the whole day. Those are days where you can just make a fortune trading. Just hang on to those trades and have a trailing stop and ride it. Another one you could have looked to sell was weak pound against the strong yen. Now the only downside of this is the weekly and monthly trend of the yen is actually down, so it's not as likely to be as big a home run as the Swiss trade here. But let's take a look at the pound yen trade real quick. It showed up as very weak. We have a multi-hour sideways pattern, and then it absolutely came tumbling down, which you could have caught about 75-80 pips on that one. The CAD also was weak, so you could have easily sold the CAD yen. And usually your fib target makes a great place to get out of your trade, and if you are going to do a counter trend trade, that's the place to begin looking to scale into a buy. I've learned in the last 12 years of trading that it's impossible to pick the bottom or top. Absolutely impossible. The only way to have a chance at making money buying the bottoms or selling the tops is to most of the time I do it by drawing a fib on the previous big swing. The bigger the swing, the better. Wait for it to get to this level, and then buy and scale in down there. And if you scale in the right way, usually if it has a 10 or 15 pip counter trend move, even if it goes 20 pips against you, if you scale in properly, you can get out of the trade with 3 to 5 or 6 pip win. And if it takes off like this one, catch 20 or 30 pips and then get out. Don't be greedy. If you see a big move up like this, but there's not that much statistical strength, take your 20 or 30 pips and be happy. Counter trend trading is not for the faint of heart. I'd recommend it only for people that have $5,000-$10,000 accounts or better, or trading very, very tiny lot sizes, because you can wipe your account out by trying to scale into a trade too early. So have patience.